Perfect, how are we doing? So what we're going to do now is go to the charts and show you premium and discount pricing with everything that we've done so far and just start piecing things together. We're going over sort of similar price action just so you can see and piece together and understand how it all starts to come together. So what we're going to do is we're just going to look at the most recent breaker structure that we have right here. Okay, we've got this breaker structure, okay, which we know when we're bullish we have left behind a new higher low in the market before a higher high. We understand that when we're bullish we have a protected higher low within the market, which is this level right here, and we understand that we have this weak protected low, and we have, when we start to pull back, a weak high within the market. So we know currently that what do we know that we expect to see happen within the market? Okay, we expect to see a new higher low in the market before a new higher high. So we knew, looking to that before, we're expecting to see a new higher low before a higher high. Okay, but now we can implement premium and discount pricing into this. So all we do to understand is that we know we're bullish at the minute, right? So when price is bullish, what do we expect to see? We expect to see a new higher low before a higher high. They're pushing price up. The banks and finance institutions, the composite operator, whatever you want to call them, they're currently buying. So what do they want to do? They want to buy things when things are cheap, so they want to buy at a discount. So what we do is we get our Fibonacci tool, which we have on the we'll show you the configurations once again quickly. We have 0, 0.5 and 1. Okay, so literally 50%, and all we do is we draw from the swing low, the protected low in this case, to the weak high. We just draw on a 50% fib tool, right? So we can see here the 50% line if we just draw a line going across. So anything here now in this bottom half of this range, okay, is discounted pricing. So anywhere below this point here is a good place to buy. So when you're trying to trade, and if you were taking trades and looking to buy, if you're trying to buy here, you're in premium pricing, okay? Because the top 50% of the range of the swing high to low is the premium, okay? So we know we're bullish, we're looking for a new higher low in the market before a higher high. So we want to see price pull back into discounted levels before we continue, right? So that's what we'll wait to see, okay? So I'll just leave the line on just so you can see to make it a little bit easier. So we're looking for price now. Obviously you can see the 50% tool, obviously just so you know why I've drawn that line. You can see the 50% range tool, you can see the 50%, I've just drawn that just so you can see overall, just like across the chart, so you can see, right, okay, price has pulled back into the discount now. We've come into the discount, so now we've come in essentially good pricing, right? This is discounted pricing. You want to buy at discount. And then what happens? We get a break of swing structure, okay? So we can see now we've had a break of structure. The banks and financial institutions, the composite operator, they pull prices back into discounted levels below the 50%, and then they continue to put on and break structure and put in a new higher high. So what we'll do is we'll delete that, and we'll delete the new protected low, because that is no longer the protected low in the market, okay? So we know we have now a new protected higher low in the market. It's the lowest point that's led to the break, okay? Which is this level right here, okay? This is the new protected low, okay? We started to pull back. We've left behind now a new weak high in the market, and we've started to pull back. Once again, price is bullish. We expect to see a new high in the market and the protected low not to get ran. So we draw on with our fib tool, a 50% tool from the low to the high. Now, it's not really clear to see. You can see here where the line goes. So you can see here, I'll just draw a line just to make it a little bit simpler. So you can see exactly where it is, but I like to draw it like accurately on the swing high to the swing low. But you can see now I've drawn it, and you can see here now the range, okay? So anything now, if they're going to continue on to buy, you want to see them pull it back into discounted levels, which is the bottom 50% of the range, which is from the swing low to the swing high, because we know we expect to see higher high, higher low, higher high, higher low. We want to see that new higher low in discounted pricing, because they're buying. When the banks and financial institutions want to buy, they want to buy at a discount. So they want to pull prices back into the discount before they continue. Okay, so let's just put price on. We can see now we're in discounted pricing. So now this is a good level and area to buy in, because we're at discounted pricing. Okay, let's see what happens. So we can see price is currently in discount. And there we go. Okay, now we've had a bullish breaker structure once again. So we can see we had a higher high, a higher low, a higher high, a higher low, which has led to a breaker structure. They pulled prices back into discounted levels before they continue. They didn't break the protected low, because obviously we know when we're in bullish market structure and we've got bullish trend, we don't expect to see the high low get violated, because obviously bullish market structure, we expect to see new highs and the lows to remain protected. And what do we get once again? Okay, we have now a bullish breaker structure. Okay, Okay, and this is no longer the protected low, and this is no longer the swing structure, because obviously we've had a new breaker structure. When we get a breaker structure, we put in new swing points. So again, we know the new swing low is the lowest point that's led to the breaker structure. Okay, so we can now draw on our swing low to our swing high. Okay, and we can just draw on, this is the new protected low, okay, in the market, and then obviously we understand that this is obviously the protected high. Okay, sorry, the weak high. Again, you understand, we draw on the lowest point to the highest point, and we draw on a premium discount tool, a Fibonacci tool, from the lowest, from the protected low to the weak high. We can see the line going across, but again, I'll just draw this on just so you can see a line, just so you can see exactly where it is. So we know now we've put in the new weak high, we've had a confirmed breaker structure. We want to see price pull back now into discounted levels, which is below the 50%, okay, of the range. So you can see obviously top 50%, bottom 50%. We want to see price come in, put a new high low in the market before a new high, okay? And this is the level that you want to do. So we know if you're trying to buy, because we're bullish, you don't want to be obviously, and we're bullish, we understand that we expect to see a new higher low before a high. So if you're trying to buy and pick that higher low within the discount in the premium pricing, you know, you're not in good areas to buy, because you don't want to be buying when things are expensive, because the top half of this swing structure is the expensive area and this is the cheap area. This is the discounted area. So you want to be buying in this area, in the bottom 50%, before we continue. Okay, so let's continue to play price on, and you can see we're in the discount. And what happens? Right, okay, there we go. So now we've had a bearish breaker structure, okay? The expectation now has switched bearish. We are no longer in a bullish trend, okay? Because now the high low has been violated, okay? And we've now had the protected low has been taken. So now we understand now we've got a new lower high within the market that is protected, which is this point right here. We understand that this is the highest point that's led to the breaker structure. So this now is the new protected high within the market, and we're starting to pull back. So now we know that this is currently the weak low, because obviously we know the weak low, the lows are weak, because when we're bearish, we expect to see new lower lows and lower highs in the market. We expect to see the lows get continuously taken while the highs never get broken. So we can start to see we're pulling back now. So we've got the weak low, we've got the protected high. We expect to see a new lower high in the market before a new lower low. So where could we expect to see price put in this new lower low? Sorry, lower high. Okay, we want to see it within premium prices now, because when price is bearish, we know that we want to be selling, because price is in a bearish trend and they're pushing prices down, and they are shorting and they're selling. So what do they want to sell? They want to sell when things are expensive, because obviously you don't want to sell things when things are cheap, because you'll lose money, right? So you'll lose out on money. So we draw from the protected high to the weak low. Well, that's to draw nothing. So you go from the protected high to the weak low, okay? And we can see here now where the 50% of it is. So we can see here now, you can see here that this line here, I'm just drawing it on just so you can see exactly where it is. So here's the 50% of the swing structure, right? This is your swing high, this is your swing low. So anything above the premium is the ideal situation and area to look to buy from. So if you were to try and sell from, if you were to sell from where we are right now, as where it's given prices right now, price is in discount. You don't want to be selling things when things are at discount, because you'd be losing money, right? They want to sell things when things are more expensive, when it's at a premium, which is in the top part of the range. So let's play price out and see what happens. You can see they've just come and tapped in to the 50%. They've just come into premium, right? Because anything above this line here, anything at the top 50% is the premium. They've just come and tapped into the premium. And they continue to push price on, right? They've just come into the premium, right? And then they've sold off, right? And that is the same thing again. We'll do it again. We've had a new breaker structure, okay? This is no longer the protected high within the market, because we've had a break of swing structure, okay? And this is the high that's led to the low, okay? We're going to wait now to get the pullback. Okay, we've now started to pull back, as you can see. So this now we understand, like we drew before, we have the highest point that's led to the breaker structure. So this is currently our protected high within the market. We understand that this is swing structure. We understand that we're bearish still. We have an expectation that the protected high should not get ran, whilst the lows should remain intact. This is currently our target, and this is currently our protected lower high within the market. Same thing applies. We understand that we expect to see a new lower high within the market before a new lower low. So where do we expect to see that new lower high get put into the market? Well, the ideal situation in place is going to be in the premium, okay, which you can see prices come in. It's putting its lower low, break a swing structure. We expect a pullback. Prices start to pull back now, and you can see once again, you can see the 50% of the range, okay, it's pulled back into the top 50% of the range. and now it's starting to sell off. So now we're in an ideal situation to look to sell price. So price has pulled back up into premium, and let's just see what happens. So price pulls up, price continues on, and it's led on to break structure. So you can see here now consistently that price now, when it's bearish, we're looking for price to come back up into the premium levels before it sells off. So that's that example. So we're going to move on to now some more examples. Right, okay, so what I'm going to do now is we're going to show you some more examples with different swing structure on the same. We're still on EU on the 1 hour time frame, but I know within this swing structure sometimes it doesn't come up to the 50%. So that's what I just want to show you here now. So what we've got here, as we can understand and look for the most recent breaker structure, I think we can all agree that this, well, obviously that'd be the fail to close, but we'll just for now say, well, we'll draw that on properly actually. There's breaker structure, sorry, that's your fail to close, and that'd be your true breaker structure, okay? But we understand it's the highest point from the fail to close, that's led to the boss, which is this point here, has led to that breaker structure. So we understand that now we're currently in a bearish market, we have a protected high within the market, and we have a weak low. Okay, we understand we want to see when price starts to pull back, which we start to get here now. We start to get this sort of pullback. 61, yeah. So now this is starting to pull back, so we can understand and denote that this is a weak low within the market, and this is a strong high. Now, same thing again. What do we understand? This is our swing structure, and we understand that currently we're bearish, and our expectation is to see a new lower high in the market before a new lower low. So what can we expect to see happen next? Okay, we expect to see price put in that lower high before the new lower low, but we understand that when price is bearish, what's happening? The banks and financial institutions, the comps that operate, they're currently selling. Okay, so when they're selling, when do you want to sell? When things are expensive or when things are cheap? You want to be selling when things are expensive because you make the most money. So we understand where the premium levels are. We draw from when we're in a bearish market, from the protected high to the weak low, and we can understand and see where this 50% of the range is, and we know that the top 50% of the range is the premium and the bottom 50% is the discount. So ideally we'd like to see prices pull back up into premium levels, okay, above the 50%, somewhere in here, before we continue on and sell off. So let's see what happens. Price pulls back, it comes into premium, and it starts to sell off, right? And now we've had a break of structure, okay, to the downside, okay? Had that break of structure now, okay, and now this has left behind a new protected lower high within the market because we've had a break of swing structure. So we can see we had this low, that's led to this high, that's led to this new break of structure. So we understand now that this break of structure has left behind this new protected lower high in the market, and this is protected. So we expect that this shouldn't get ran. Okay, and we start to pull down. So now let's start to see, we wait for the pullback. Okay, so that, yeah, you can call that, I'm going to call this all one swing structure. Again, not going to go into too much in detail, but I'm going to see that as all one swing structure, and wait for a significant pullback, something like this. Okay, let's just wait and see price. Okay, so this is all one string structure for me. It'll all make sense when we go into multi-time frame analysis, but just for now, understand that we've got a protected lower high in the market, and we've got a weak lower low. This is the weak low. We understand following bearish market structure, we have an expectation to see a new lower high before a new lower low. And where do we look to want to sell? Obviously, we want to sell if things are more expensive, which is at a premium price. So where is that? It's going to be at the 50% or in the top 50% of the range of the swing structure. We draw it from the swing high to the swing low. So we can see here now, this is the 50% at this level. So we want to see prices come up into somewhere up in these levels up in here to look to put in that new lower high before we continue in the given direction, which is bearish. So let's just see what happens. Okay, price pulls up into into premium, and we go ahead and break swing structure once again. So you can see how we're piecing things all together now. And then obviously, by the time we come to the end of this, you'll be thinking, well, how do we use this? Think about how, if we've got bullish market structure and we want to, and price is looking to continue to go up. So we know that when we're bullish, we can look to buy. And then obviously think about it. Well, we know where our weak levels are and our strong levels are. Okay, so we know where we're expecting to get ran next, and then you can go understand and go, okay, well, we know that likely we'd like to see prices pull back into either a premium or a discount. Understand the structure, and slowly you'll start to see as we go through each concept how each one starts to tie in with each other, so how you eventually build these trade ideas, right? And it'll all start to make sense. So what we had now is we've now got a break of swing structure right here. This is our break of structure. Okay, we no longer have this protected high in the market, which is this level right here, and we have a new lower high in the market. That's led to a new lower low, okay? And we'll wait to see the pullback. Okay, this is now a pullback once again, and you can see here now, this breaker structure left behind this protected high within the market, not protected low, sorry, a protected high, which left behind this new protected low, okay? And it's the same thing applies once again. We have this high that's led to this low. So understand what we're looking for, a new lower high before a new lower low. Once again, when we're in a bearish market, we're selling, we understand we want to sell when things are at its premium, which is in the top 50% of the range, which you can see we've already pulled back to, okay, which should be above the 50%, which is this sort of level here. So we've already pulled back into there, okay, before now we're looking to put in that lower high before we put in a new lower low. So we know when we start pulling back, and we've got the swing high and the swing low, we know that if we're going to try and sell here, we're selling at discounted levels. You're selling when things are at a discount. You're selling things when things are cheap. The banks and financial institutions or the composite operator, they do not want to be doing that. They want to be selling when things are at a premium, when things are most expensive, okay? And that is at the 50% of the range. So we continue on and see, they've come up into premium now. We can mitigate right to the extreme. That price play out a little bit, and we can see once again that overall, think about how everything now is tying together. Bearish market structure, protected lower high, shouldn't get ran, weak low has been ran, it's pulled back up now into premium. All these things will slowly start to add up. Every concept that you add will slowly start to add up, okay? So we've got a new breaker structure. This is no longer a protected high. This is no longer a swing structure. And we have now a new swing high in the market. It's the highest point that leads to the breaker structure. Okay, now this is the protected lower high within the market. Okay, there's the new protected lower high within the market for the new low. Let's wait for the pullback. Okay, so this is now started to pull back. Okay, we'll wait to see what happens a little bit. Yeah, so this is now a significant pullback. So what we do now is we go from the high to the low. And once again, what we're looking for, price now to come up to above the 50% because we know that we're bearish. This is the protected high within the market. And this is the weak low within the market. Okay, weak low, strong high. Okay, so we understand now that what we're looking for is price to pull back up into these premium levels before we sell off. So we know if we're trying to sell, so we can see here that if we were to try and sell now, we'd understand that we're selling when things are at a discounted price. And most of the time, we do not want to be doing that. Well, we never want to really be selling at a discount. We want to be selling when price is at a premium, which is at the top 50% of the range. So delete the old one and we'll wait to see what happens. Okay, and as we can see here, this is why I chose this example. We can see here now that price has led on and broken swing structure. You can see here this was the swing low. Okay, as you can see, this is the swing low, which is now putting a new lower high before a new lower low. So this has gone on and broken swing structure, and it came off something that was in the discount. So this is what I'm trying to say. It doesn't always have to pull back to the premium and to the discount, but you can see after all the examples that we've done, you can see here that this is the first one out of a lot. I didn't count how many. You can see every single one besides this one first, okay, goes ahead and respects to either pull back to premium or discount given its trend. Whereas this was the first one to sell at a discount, right? And this will happen sometimes, right? But if we continue to go on, and I'm not going to continue to go on for this, but if we were to continue on and go through the structure, this continues to respect and happen again. And this is the one anomaly where it didn't happen, right? And, you know, that'll happen, and you've got to understand that. So sometimes it'll happen. Can you still take trades? Can you still take shorts when the price is discounted? Of course you can. And can you still buy when things are in a premium? You can. But you've got to understand that more often than not, the true move will be coming from buying within a discount and selling within a premium. And that is what you want to remember. When you're in a bullish market, you want to be buying when things are in a discount. So when price is putting that higher high, when you're looking for price to pull back and price does start pulling back, and you're trying to catch that higher low, ideally they want to be the banks, financial institutions, the composite operator, they'll be pulling prices back into discounted levels, which is at the bottom 50% of the range, and vice versa for a bearish market. When they're pushing price down and they're selling, when they pull back and put in that new lower high, they'll be looking to bring that lower high into premium pricing before they continue to sell off. So this is premium discount pricing. What we're going to do now is move on to the next episode in market structure.